What's up, everybody? This is YouTube Live Everything Phoenix, guys. This is probably the most fun I have all week is going live with you guys here today to talk about everything that has to do with Phoenix and development and real estate and a lot of topics because, guys, Phoenix is the place people want to be. And a lot is going on, guys. So today we're talking about, a little spring training baseball, the Cactus League, right? I'm not sure if everyone is aware, but it's starting right now. And half of Major League Baseball teams come down to Arizona, really just the Phoenix area. There used to be some in Tucson. There's not anymore. They're all in the Phoenix metro area. And then you have the other half going down to Florida, which is called the Grapefruit League. All right. Now we have grapefruit here in Phoenix as well, but we're called the Cactus League because we have a lot of those as well. So it's awesome. We're going to talk a little bit of that. We're going to talk about the housing market. Then we're going to talk about the seasonality and what's going on here because, guys, we know the seasonal market here in Phoenix is very important and it's very trendy. So why is it a little bit in a slump, or is it? We're going to talk about that today. We're going to talk about the investing aspect in Arizona and who is really supporting Arizona investing in real estate because there are people that there's one big name right now out there that's very, very bullish, as well as others, but one in particular that you have probably heard of that we're going to discuss today. All right. And then we're going to talk about some other aspects of the housing market here in Phoenix because I got some cool graphs to show you today. So stay tuned for that. It's happening and it will explain a lot of what's going on. But right now, you have a Federal Reserve that is pulling a lot of strings very with intentionally and kind of unintentionally when it comes to what they are saying, their rhetoric and so on and so forth, and that's keeping the markets down or up, however you are looking at it. So we're going to jump in right now. I'm going to share my screen, guys, because we're going to talk about the housing market, and we always start here because why not? If you're looking in a certain area to live, which you would be if you're going to move in Phoenix, you want to know what's going on in those certain areas. But before that, let me just read what February 23rd, what they had to say about that. Okay. The current market right now. At the start of the year, we were hoping that sales volume would have turned around by now to be starting to climb as the spring season got underway. This is unfortunately not happening yet. The latest reading of the annual closing rate is 72,000 across all area types. And this is down from 72,359. It's a small drop just a week ago, and 72,448, another small drop the week before that. Not encouraging. Right there, guys. Not encouraging. Okay. Now, does that mean the wheels falling off? No, it doesn't, but it's just not encouraging as much as we hoped the demand would just super spike like it does this time of year. It has, but not to the extent we would like to see. Now, it says there are a few segments that are seeing some growth, but even in the city of Phoenix, we have dropped below 10,000 single family closings per year for the first time since 2008. So, guys, what this means is that right now transaction count is sluggish. It is slow. And if it's slow in Phoenix this time of year, it's going to be slow across the country. There's no question about that. We think that Phoenix has the highest potential, one of the highest potentials of any marketplace in the United States over the next year, let's say at least. And then, in the future, I think that's going to be very much so the case also. So again, right now, the powers that be, NAR, Realtor.com, some of these big name companies that have economists on staff, et cetera, they are saying that you're looking, Fannie Mae, Freddie Mac, et cetera, they're looking at a transaction account overall America to be around 5 to 5.1 million homes by the end of 2024. So what does that mean? Well, in comparison, last year you're talking about 4.3 homes sold, 4.2 and some change. So that being said, that it is a huge increase, which is about the levels we were at before we had this market decrease, right? About 5 million homes selling across America. That would be a huge increase for us to get that to that number this year because, guys, with transaction count, a lot of other industries benefit. We're talking all the trades. We're talking all the mortgage industry, the property management industry, the home inspections, and all that stuff, as well as just trades for remodeling, things of that nature. We have an article we're going to cover today regarding the remodeling aspect and what the average times are now of what people are doing when it comes to staying in their house or turning it over and selling. We're going to cover that here in just a second because the different generations are staying longer than others. And so we're going to cover those here in just a few minutes. So I'm going to share my screen again, guys. We're going to jump back into the numbers, but you can see right here across the 17 major suburbs of the Phoenix area, you have a certain amount of change of demand on the CMI, the Cromford Market Index. Okay. So right now, Chandler is still leading the way. They have been, or it has been for quite some time. And you can see where else is going well. So Chandler and Gilbert, you're in a major, not major, but yeah, somewhat of a major seller's market. Let's be honest, okay? Because again, between 90 and 110 is a balanced market according to the CMI. 90 and 110 is a balanced market. So you only have two, three, four markets that are but from a statistical standpoint, a buyer's market. Everything else is balanced, like Surprise, Paradise Valley, Cave Creek, and then everything at Peoria up, the top 10 are in a seller's market. Huh, that's interesting. Well, let's look at a couple more data points. So you have the gauges right here. Phoenix specifically is at 150, right? And as we talked about, you go to Chandler and wow, 203. That's leading the valley right now. But look, you can see demand and supply. Supply is so low in Chandler, which is really causing this 203 to be so high because demand is sluggish, although it's some of the best demand we have in the area. Go to Glendale, very much so the same. Doing well overall, low supply. Let's go to Scottsdale. You're going to have a higher supply right now, and demand is going to be a little bit higher as well because it's seasonal, but therefore overall causing the 122 to be a little bit closer towards a balanced market. Okay. Now let's go to the next thing. Now, this is interesting because, guys, this graph shows the percent of closings with seller paid concessions noted. Now, right now, why would seller pay concessions be a big thing? Well, here's the reason why. Mortgage rates. That's the reason. Primarily because you have rates that are still so high. You're talking 7.09. So rates are hovering around 7 still on the best type of borrower. Really, because they are going to go up if you have, not as good of a FICO score, if your debt is a little higher to your income ratio, that sort of thing. But why it's so important is because of mortgage rate buy downs. So if you go back to this graph right here, you can see that the percent of closings are so much higher than they have been just a year and a half ago, 2 years ago. Why? Well, because this is when the market started to go down. And when it went down, it was going down because rates were increasing dramatically. So when people purchase a house, they're buying a monthly payment. They're not buying the house. They're buying a monthly payment. So if that's true, then they need to get that monthly payment as low as possible. And to do that, you want to get the rate as low as possible. This is not rocket science. And so if you can get the seller through negotiations to cover the cost to buy down your rate, then that is a beautiful thing because you're not having to come out of pocket for that as the borrower, right? And that's what we're seeing. So if you share my screen again, you're looking at right here, 44% right now, although it's down a little bit from where we were, okay? As of February, you had 1,600 closings that had seller paid concessions. The median concession amount, $9,277. Now, compare that to December 2023, try to get that out there, guys. That was when the market was arguably the slowest. I mean, honestly, if you're a buyer, even though rates were still high, December 23 was the time to jump in as of right now. Now, obviously, it's still a good time to jump in, I think, overall, because you need to get in the game of homeownership to start building equity. And if you can pull some levers to get your rate as low as possible, your payment as low as possible, it's going to be a very good thing, guys. So $10,000 was a median concession in December, with 2,200 closings actually getting some form of seller paid concessions, primarily to buy down that rate. Because, guys, rate buy downs for a year or two could be in the ballpark of $10,000, $12,000. It just depends on your loan amount you're getting and that sort of thing. 3-year buy down, 3-2-1 buy down could be in the ballpark of $20,000+. So it just depends, but consult your lender, consult us. We'll get you in touch with a great lender that can tell you exactly what your costs will be to buy down your rate for 1, 2, or 3 years. Okay. So now, moving along, the seasonal trends. Here we go. So closed sales by calendar month. All right, this is interesting. So this is what you can expect in Phoenix, guys. Okay. So right now you have January, February, March, April, May, June, July. These are the closed sales for the area. Now, obviously, this is over a long period of time. This is not every single year. We're not closing 125,000 homes in Phoenix in 1 month, right? But you can see right here, oh, my chart's going crazy. There you go. All right, just refreshed. So right now, you can see the seasonal. So right now, the seasonal range is right now. We're in it, February, March, right? This is perfect right now. And then it climbs and peaks typically in May or June right in there. And then it starts to go down. Yeah, but Kelly, I thought it's hot in June there. It is. It can be. However, a lot of people are still making moves because of schools and things of that nature in June. So a lot of homes are still selling. Plus the demand, the activity in May is usually pretty good, leading to those sales in June. But look how it goes down typically throughout the year, right? Now, that means we still have demand. There's still a lot of homes closing, guys, but it just may not be as many as you would like this time of year. So if you're a home seller, this is the time to have your house on the market, even with, especially with supply being so low. Okay. Now, this seasonal chart will also give you a good idea of new listings coming to the market by calendar month. Guys, every year, January has the most closing or most listings hitting the market. And you can see right here, it's evidenced by data. Go figure. Okay. And then it kind of drops off a little bit because everyone lists their house after December in January, and then it goes to February and so on and so forth. And guys, bear with me on my voice here because I coached 8 basketball games yesterday. It's playoff basketball time. I have 2 sons. I coach their teams, and my voice is a little hoarse for that. All right, but I'm hanging in there. But you can see this. I want to show the seasonality of this for you guys because it's very important to know how to time, if you have the ability to time, your purchase or your sell. Okay, give us a call. We can break these charts down even more because look at all the data I can pull over here for your specific price range, your specific area of town, your city, your county, your zip code, your year built, all these things. So it's fun. We can play this data so you have a really good idea of what you should do in terms of that time. It's a great tool to have. Give us a call, 480-660-5974 for any questions you have about this tool, okay? All right. Okay, now I got to share this one. Jason LaFleche, my man. There he is, Mr. Sexy. I'm assuming you're talking about yourself, but I try. Thanks, Jason. I appreciate you, man. I appreciate you. All right, here we go. Days of inventory. This is interesting, right? Now, what's interesting about days of inventory, all right, is that this shows you right now that 77.3. Okay. If in 77 days, no more homes came on the market, there'd be no homes for sale in the entire greater Phoenix area. Isn't that crazy? Now, that's not going to happen. Never has. And it's not like it's been way lower. You can see right here in 2021. Holy cow, look at that, right? It got down to around about 16 days of inventory, somewhere in that ballpark, right? 14 days right here. And so it got squirrely there for a little while because we had no supply. We had so much demand. Okay. And then you go over here to the running average of the orange line. And technically, if you're below that, it's a good time to sell. If you're above that, maybe a better time to buy. Now, what's interesting, if you look at it, 77, last time I checked, I didn't miss this day in math class, I don't think, is above 64.9. So technically, this would actually be a better time to buy. Even though the Cromford report shows Scottsdale, Phoenix, all these different areas, that it is actually a seller's market. Isn't that interesting? So the data shows a seller market, but based on days on inventory, you would say, hey, you know what? I should probably jump in to buy because I'm going to have more leverage to negotiate the terms of my offer and buy that rate down. Okay. Jason, what's going on? That's you, homie. All right. Fair enough. I'll take that compliment. Thanks, Jason. Running at altitude. Hey, thanks for commenting as well. I'm curious to know the days of inventory for single family homes. Well, let's pull it up right now. Okay. So let's go down here. I'm going to go days at single family homes instead of all. Let's go. It's going to refresh here. Okay. Give me a minute. Here we go. All right, we're gonna pull this up, guys. So single-family residences, SFR. Here we go, guys. Give me a second. We're trying to pull this up. Boom. And hopefully, here we go. 74. So it dropped 3. It was at 77. Now it's at 74. And so days on inventory is still up pretty good above the running average for just single-family homes. But great question. Thank you for asking. And you guys can always call me, like I said, or email me at info@cookandassociatesaz.com. And I pull any of these custom reports and email them on over to you. All right. Absolutely. Thanks. You bet. Absolutely. Anytime. I will be happy to pull those, guys. And thank you for watching. We're going to keep it rock and rolling because this is hopefully good and educational data. And let's go over to the demand and index Cromford supply chart. Okay. Well, look at this. This is kind of cool. Now, the way Cromford, Tina actually always describes this is that supply and demand are just two lovers that want to be together. It's kind of interesting. I know, but that's how she describes it. And so I'm just going to repeat it because she's smarter than me, right? So here you go. When they're apart, it's not ideally a gray market. Now, it depends what side you're on. Of course, like right now in July 21, it was a phenomenal market for a seller, but it was really, really tough for a buyer. Why? Because demand was through the roof. Supply was very low. They were apart. Okay, same here. Back when the Great Recession happened, right? So right now, they came together here in January, December, but they're starting to go apart again. You can see right there. Now, we're still below overall. Now, if we're below overall, you can still be in a seller or buyer's market because demand and supply make this up. But we have low supply, guys, and we have low demand. It's interesting. Now, you see this demand starting to go the opposite way, right? Through February. That's good. Starting to increase a little bit. We need that. So we'll see how it runs. But if you follow the seasonal chart right here, it should run, as you can see, in the March and April, June, May, and June. Okay. So now that's the chart. I hope that wasn't too much information to geek out on, but it's good stuff. That's 15 minutes of data that you can't really argue because the data is the data. It just is what it is. We may not like it. We may not want to admit it's true, but it is what it is. But what does that all mean, guys? It means, you know what? Kind of a whole lot of nothing right now. Why? Because this is what the market we've been in for a while. Rates are high. We know about what to expect in Phoenix based upon rates being around 7% because they've been there for so long now at this time. But hopefully that changes over the next 3 to 4 months when the Fed continues to meet and hopefully they decide that inflation is kind of under control and they lower the rate at least 25 basis points or so, right? Or 250 basis points. There we go. So here we go. We're going to share my screen and I'm going to jump back in because I like to jump back into some good stuff. Here we go. A generation-old tug of war is hampering the housing market and limiting buyers' options. There's a picture of a street. This is a good article. Okay, Abby, what's going on? Love the charts. Helps understand what's actually going on versus just hearing somebody talk about it. Yes, that's the point, right? The whole media is going to tell you this, that, and another thing. And plus, the media a lot of times is on the macro scale. We want to be on the micro scale. And that's why I can get even more micro for your neighborhood, zip code, etc., if that's what you want to do with some of these charts. All right, back to the screen. Here we go. This is interesting data because it shows time frames of people staying in houses and things of that nature. Here we go. Home buyers in today's market are increasingly faced with an inconvenient but inescapable truth. There are fewer homes for sale, like we just talked about, and the ones in the market are often in need of big repairs and renovation. Okay, here we go. A recent report from home improvement company Leaf Home and Morning Consult found 73% of baby boomers have been in their current home for 11 years or more, and over half own homes built in 1980 or earlier that have never been renovated. That's incredible to me, guys. A majority say they have no plans to do so either. Hey, you know what? I'm in my house, been here for a while. Screw you. I'm not touching this thing. I like my orange carpet and I like my, I don't know, right? My wallpaper in my bathroom. But actually, wallpaper is going to come back a little bit. So, but it's probably a funky color, is my guess, right? But the crazy part is the housing market is caught in a generational tug of war. Boomers will soon face aging in place hurdles, while millennials will face the surprise of homes in need of major upgrades. Okay, with an aging and ignored inventory of homes available in the next decade, we may see a crisis that will overwhelm the home improvement industry, which, by the way, guys, is also short of labor supply, and strain the budgets of inheriting millennials, impacting the housing market. This will be interesting. Homeowners are staying in place longer. Here we go. Why are boomers staying in place longer? Okay. They have no incentive to leave. More than half, about 54%, own their homes free and clear without a mortgage and a monthly median home ownership cost of roughly $600. That's it. Why leave? Nearly every baby boomer that does have a mortgage has a much lower interest rate than today's rates of around 7%. Often, older Americans who have lived in their homes have the longest tax advantages. In some places, California, Property taxes are waived or rights are pegged to the year they were purchased, incentivizing long-term residents. Okay, that's interesting, right? For all those reasons and other factors, they have kept housing inventory at historically low levels. Redfin shows overall inventory bouncing back slightly from the depths of the COVID-19 pandemic, but still remains far below pre-pandemic levels. Yes, it is. Okay, and then constrained inventory means higher home prices. Guys, this is not a shock. We know this. Okay, but we're hoping that people have been sitting on the sidelines for a while now. He said adding more flexible remote work arrangements will also free people up to move to cheaper areas. I think you will see a lot of movement of people that will add to the inventory. So this is interesting, guys, to see what will happen here over the next several years. This is more of a longer term problem. It's a short term problem too. Don't get me wrong, but it'd be really interesting to see what happens in the next 5 to 10 years. Okay, as the baby boomers continue to age, right? Will they just stay in their house? Will they eventually downsize if rates drop to something that's halfway reasonable, somewhat close to the rate they have now? 5%, 5.5%. We'll see. But that's an interesting article, I thought, overall. Here's the investor, Grant Cardone himself. Okay, I'm not sure if you guys have been following what has happened in our good friends over there in New York State, but there's been a recent ruling regarding a prominent businessman who you guys may have heard of, where there was a large fine given on the business sector from a judge. So I'm going to share my screen, guys. But Grant Cardone said that he doesn't want to get into politics. He doesn't like getting into politics, but he's not making a political issue. He said he's just simply stating that this is not politics. This is business. Okay, it's purely business. I won't risk our investors' money in states where politics is getting in the way of business. And what he's doing is referring to the $355 million fine a recent New York judge placed or required of former President Donald Trump and his companies to pay for a civil fraud case. Okay. He said right here in his post on Twitter that that he's looking to go to Arizona, Florida, Texas, and Tennessee. And what he said is a shame he can't spend my business across America. I have to be selective about states that even weigh in on politics. He said Arizona is one of our favorite states to invest in. Here we go. Yes, one of our favorite states to invest in. If you want to invest, come to Arizona. Okay. And we just expanded on a 250,000 square foot building in the Kierland area in Scottsdale. That's awesome. He's going to continue. And it got renamed to the Cardone Corporate Center, no longer the Promenade. Okay, which is awesome. Good for Cardone and his venture company. Okay, but his real estate portfolio includes 12,000 plus apartments, primarily in Florida and Texas. And Arizona now is a big player for him. So, guys, Arizona is open for business. So, bring your investment dollars down here. We'd be happy to help you find some residential investment or even potentially commercial as well. We can definitely guide you along that route and get you to the best hands possible. All right, TSMC reaches construction milestone for second Arizona semiconductor factory. Guys, all I'm going to do is point out for you in this article of the timelines, okay? The timelines right now, I'm going to show you right here, is that the production of its first fab, where to go, okay? $40 billion worth of microchip manufacturing facilities, okay? Fab 21 in North Phoenix is expected to start a high volume production in its first fab, which is still under construction in the first half of 2025. Guys, it's going to open. It's going to produce in 2025. Here we go. This is big time for Arizona, okay? And the second fab, which is already under construction, is expected to start in 2026, but could shift to the start of 27 or 28, depending on consumer demand and U.S. government incentives. So, guys, that's pretty darn cool. And the Arizona TSMC headcount now tops 2,000 workers, guys. This is a big job center for Phoenix, okay? And then right now, you do have the government looking to invest into 5 major cities in America. We talked about this. Phoenix is one of them. They have dictated as one they outlined to give money to continue to produce microchips. It's awesome. Okay, next one. D.R. Horton, the nation's largest land builder, just bought more land south of the Phoenix area, guys. You can see this little picture here. So basically, they bought a big plot, and they're going to develop a bunch of homes. But this is important. Why? Because it's showing that builders are bullish on Arizona. They're going to continue buying land and continue building houses because we cannot build them fast enough right now, especially when it comes to affordable housing, which is more so located out there on the outskirts of the Phoenix metro area. Okay. Next one, guys. Like we talked about, I'm not sure if you heard, But I love sports, as you know, and the Cactus League, guys, it's getting ready to start. Matter of fact, it has started with the pitchers and the catchers reporting for duty. Okay. There's the D-backs. They actually went to the World Series last year and lost. I know, it's sad. To the Texas Rangers. Both are in the Cactus League. So guess what? The prices just went up of your spring training ticket to see those two team plays. I'm sorry, right? But that's what happens. I remember when the Giants went a few years back. Holy cow! I went to a spring training game and it was like, I don't know, $15, whatever, or $10 to $12 to sit in the lawn. And I went to a game the very next year if they won the World Series, and it was like $25 to sit in the lawn, like almost double. It was crazy. But that's what happens, I guess, supply and demand if you're a good baseball team. So this article breaks down every single team, which we are not going to do in this video because I don't want to bore you to death, especially if you don't like baseball. But needless to say, if you want this article, I can maybe get it to you. But Chicago Cubs, you have the White Sox, you have the Reds, you have the Guardians. We'll run through these teams really fast in the Cactus League. The Colorado Rockies, you have the Royals, my favorite team personally. I'm a Kansas City Royals fan, guys. I know I'm a glutton for punishment. Let me tell you. Los Angeles Angels, Los Angeles Dodgers, who are the favorite to win the World Series, by the way, after signing this young man right here to a huge contract. Guys, did you know that his contract right here, this guy right here, was for $700 million? $700 million, this guy right here. That's borderline insane, but I assume the math pencils. Otherwise, the owners wouldn't do it, right? The Brewers, the Oakland Athletics, the San Diego Padres. You have the San Francisco Giants, the Seattle Mariners, the Texas Rangers, who won the World Series, and that rounds off the Cactus League, all located right here in the wonderful city of Phoenix, Arizona. Okay, so come down, check out a spring training game in March, and just soak up the sun rays. It is amazing. It's so much fun. All right, the Fairmont Scottsdale Princess, guys. Some of you guys who visit the Scottsdale area love to stay there. It's a 5-diamond resort, and they're going to make it bigger. There's a picture of it. It is awesome. Great place for a staycation, too, by the way, if you live here. Holy cow. In the summertime, great deals. Go enjoy the pool. The kids can go nuts. They have all kinds of kids facilities, too, if you want that. So pretty cool place. But they're going to actually put this stuff in right now. I love a good visual, guys. I like to give you visuals because I'm a visual person. Here you go. The new event lawn, the new ballroom, new parking structure. Okay, here's the main resort right over here. You can see my cursor going. And then in ballrooms, and then the guest rooms and a restaurant. So this will be done at the highest level. I guarantee you, a new Michael Mina Italian restaurant, I believe, is what they were putting in here. It's gonna be awesome. So, and some bungalows, some upscale bungalows. They call them Sunset View bungalows. So that'll be fun. And then we can't go through a Everything Live Phoenix without talking about pickleball for a second, right? I mean, this Gilbert Regional Park Pickleball Oasis offers electric atmosphere to draw passionate community, guys. Pickleball is the craze. It is so fun. And if you're looking to play some pickleball, there's no shortage of options in Phoenix area, but this is the Gilbert Regional Park, and they have all kinds of stuff going on there. So check that out on their website if you want to go get into a good league. That is a great one, and you live in the East Valley. Okay, so good article on that. And by the way, I don't know if you want to buy a luxury house. If you're looking, Silverleaf is the place to be. There is a Scottsdale mansion that has 24,000 square feet. Okay. In Silverleaf, there it is. And if you want to buy this thing right here for $54 million, I can get you a tour. I'd be happy to represent you because this house is phenomenal, and Silverleaf is just absolutely fantastic. The best, one of the best places in the entire United States. I can guarantee it. In the mountains, in the down mountains, in the Upper Canyon, it is beautiful, and this house is not going to disappoint. It better not. For $54 million, it better be pretty good, right? I'd say so too. All right. Thank you for agreeing with me on that one. And guys, thank you for all the comments and contributing to our YouTube live today. We are right at our time, and I appreciate everyone joining. Now, we covered a lot of statistical data for the housing market. We covered a lot of development. We covered a lot of generational issues with housing and the baby boomers who are like, you know what? I've been here 30 years. I'm not going to remodel anything. And I'm just going to stay in this house because I don't need to go anywhere. I own it free and clear. Good for you. That's what we all should be striving to do to an extent, right? At least get our house owned free and clear because it just becomes an equity piggy bank for you at that point. Thank you guys for my rant and listening to me ramble today. I love it and I'm passionate about it. And if you have any questions, call us at 480-660-5974. You can download our buyer's guide or our relocation guide below as well in the description. Click on a link and we'll send it right to your email. and you can get even more information when it comes to the buying process here in the state of Arizona. Thank you so much, guys. We look forward to seeing you next week on our Everything Live Phoenix. And until then, Phoenix, keep it classy.